Well, we got what a lot of people are interpreting as very positive economic news today that in the third quarter now, uh, the U.S. economy grew by about 33%, which is one third. That sounds huge, and it is. That is a big number. That is a huge jump. And of course, that comes after the first two quarters, which were bad. We had lockdowns starting on the tail end of the first quarter, which turned that negative, and then we had a massive drop off in the second quarter, and now we've got a massive bump in the third quarter. This is, of course, very positive news for President Trump going into the election that he's going to want to promote, but frankly, I just don't see it that way. Of course, anyone who's followed this channel knows that I'm very, very concerned about the state of our economy, the health of our economy. And when I look at this number, this 33%, I look at how we got here, what it took to get that kind of a rapid, quote unquote recovery. I realized that this is not a recovery in the health of the economy. It's only a recovery in GDP. And you can have great bursts in growth of GDP. The Soviet Union during its time had strong GDP growth. In fact, back in the 80s, the GDP of the Soviet Union was growing faster than the United States, and it was estimated that by 2005, the Soviet Union would have a bigger economy than the U.S. They would be the biggest economy in the world given their current growth rates. And as we know, only a few short years later, after that was written by Paul Samuelson in his textbook, the Soviet Union and its economy, collapsed under its own weight. And so when I see, these wonderful GDP growth numbers now, after the understandably horrible drop-off in GDP that we had as a result of lockdowns, not necessarily of the bubble popping, because the Fed has kept the bubble inflated. Asset prices have not fallen through the floor. Housing has not declined. Stocks have not declined. All of these matters are still, sky high. But given, the very long run that we've had, all of this bad debt that is built up that I've talked about so much that I won't drone on about now, given all the circumstances, it'd be very appropriate for the U.S. to go through some kind of recession to where we see a drop-off in, not only a drop-off in GDP growth and a decline in GDP, but bankruptcies, bad companies going under, prices readjusting in the market, these sorts of things. That's what a recession is all about. We didn't really have a real recession. And I guess, maybe the Trump supporters would like to tout this as a good thing, to say, look, we didn't have a real recession under Trump. We had essentially, we dipped our heads below water for a couple seconds, but you were never in any danger of drowning. It's maybe how they'd look at it. But, the way I look at it is, we're propping up a zombie economy. That's all we've done. There's been trillions and trillions of dollars in both monetary and fiscal stimulus. Both sides seem to be eager to throw more trillions at the economy just to pump things up, cutting people free checks and free money. And when I look at that, I know from an economic perspective that is not healthy GDP growth. So the GDP is up, but the health of the economy is down. Okay? The United States economy is not in a good position. Just like I could tell you, without looking at GDP growth or the raw GDP number of the Soviet Union or GDP per capita back in the 1980s, I could tell you the economy of the Soviet Union was not sound. Because I knew that the Soviet Union was practicing central planning, which creates a lot of inherent inefficiencies, which are not, which were much worse, definitely than what we have now in the United States. But we suffer from the same problem. It's just to not the same degree that the Soviet Union did. Our government is propping up certain sectors of our economy. The Federal Reserve is propping up certain sectors of our economy and creating imbalances in the overall economy that hurt all of us. And so when I see a massive jump like that, 33%, and I know that that's not coming organically, all that says to me is that the eventual correction, which must happen, is going to be so much more painful than that. Every time we go through something like this, it creates more and more zombie companies. It creates more and more bad debt. it creates, more and more or lower and lower interest rates, which punish anyone who tries to save their money for a rainy day. All these people who try and save their money and say, well, what if we have a recession at some point? They're chumps. They can't save their money. You have negative real interest rates. And so everybody's incentivized to spend every penny that they earn every week. They want to cash their paycheck on Friday and have it spent by midnight next Thursday. Which means that, again, we will eventually get into a bad situation that the Fed and the federal government can't bail us out of. Everybody's going to be caught flat-footed. And as I said, a few days ago, it's pretty much clear at this point that no matter who wins, Trump or Biden, they're both going to throw everything they can at the economy to try and prop up our bubble until they absolutely cannot do it anymore. And that means that whoever gets elected president is fine destroying the U.S. dollar. They're both going all in on modern monetary theory, something that just a couple of years ago was on the kook fringe of economics. Where I went to college, all of my professors were, well to my left. And, I could still name not a one of them who didn't think that MMT was just, kookery. And yet now this has become the dominant theory of economics by the, in Washington, because it allows Washington to spend as much money as they want and justify it and say, well, no, this is science, you see. The government can print as much money as it wants. That is, and even the MMTers admit this, until you end up with inflation. And then, of course, to the extent you have inflation, your money printing ability is going to be hampered. And so what you need to prepare for now is not necessarily just the next big crash. What you need to prepare for is the inflation that will inevitably come as both parties work hand in hand to try and kick the can down the road forever. And the fact of the matter is that we have not defeated the business cycle. You cannot defeat the business cycle. I think this is now the longest expansion in American history, or at least it was until we had those two quarters of negative growth. But we didn't have a real recession. I think that that's something that I and all the and the Trump supporters can agree on. This was not a real recession. We had those 2 quarters of negative growth, and then we were right out of it. And that's not natural. So the question is, how many more stimulus bills can the government get away with? How many more trillions of dollars can the government print and then inject into the U.S. economy to keep propping this up until it all comes apart? And I don't know at this point, because I was hoping that we wouldn't get to this point to where the government would try and do that. I was hoping at some point that, cooler heads would prevail, and, we would just take our medicine. Because this is not like 2008. Okay, in 2008, we had a real recession. The government did tried to prop things up. They bailed out all the banks. They did manipulate it. It wasn't, the recession that we should have had. It wasn't the depression that we were due for. But it was at least a recession that had somewhat of a cleansing effect. And, and the reason for that is that, well, while they bailed out Wall Street, they did not bail out Main Street. And so Main Street was allowed to crash. Now, that looked very unfair, and it obviously was very unfair. Wall Street should have crashed too. But at least when you have 1 out of the 2 crash, there is there's some recovery after that. And of course, you don't destroy the dollar in the process. If you bail out all the banks, and you, in other words, print a bunch of money and hand it over to bankers who are already rich, what are they going to do with that money? They're going to say, oh, thanks, and put it in their back pocket. And they're going to cancel out their debt to each other. That's all that happened. That is not going to create inflation. In fact, it might lead to deflation, because they cancel out all that debt, and that debt is how they expand the money supply. Quantitative easing was essentially trading M2 for M1, trading base money for money that was created through fractional reserve banking. But, you know, these massive stimulus bills, if they keep coming, just one after the other, injecting trillions of dollars directly into the U.S. economy, that's a very different story from quantitative easing. It's a very, very different sort of idea. If you're injecting money directly into the U.S. economy, that is how you get inflation. It's not, you know, neutral or deflationary. It is inflationary. You know, you're trying to increase the amount of dollars in circulation to counteract the contraction in production. Because that's what that is. If the economy is shrinking and you're going into a recession, and so you say, oh my God, we have to stimulate that, what you're witnessing is a contraction in the level of production in the country. People are producing less things, so the economy is shrinking. And you say, well, we have to replace that lost production with more money. And what that does is, if you throw more money at the system, you're going to raise prices. And so therefore, you're going to raise nominal GDP. That's the strategy they've gone with. It's that simple. And it's not a good one. It's something that has never worked. It's something that they tried in Venezuela, that they tried in Zimbabwe, and that they tried in the Weimar Republic and Argentina and all these other places. And what do all those places have in common? Well, they're basket cases. That's where America is heading, down the tubes, and nobody sees it. Nobody even cares. People think that we're going to be destroyed by this dumb culture war stuff, which is a big problem, don't get me wrong. In a vacuum, the culture war stuff is incredibly sinister, what they're doing. But if you think that's what's going to bring down America, you're nuts. Even if you know, the right-wingers win the culture war and everyone becomes a patriotic American by election day, you're not going to stop this sort of collapse if you continue down this road. Destroy the dollar and you destroy the United States. It's that simple. I mean, all of our power is tied to the dollar. In fact, what these MMTers are betting their money on is that the United States is so powerful that we can inflate our money forever and never cause any inflation. And, you know, to an extent, they might have a point in that, you know, we probably would have had trouble a long time ago were we not the world's reserve currency, because you would have had a lot of speculators shorting the dollar in the foreign exchange markets, looking at how the U.S. Is so financially irresponsible. But because the U.S. is the world's superpower and the world reserve currency, that gives us a bit more latitude. People trust us more. The full faith and credit of the United States government means everything in finance. It is literally the modern gold standard. And so speculators are not going to be what brings down our currency. What's going to bring down our currency is, you know, a literal runaway inflation. And so while I'm not one of those people who back in 2008 was telling you that QE was going to create hyperinflation and all these things. And I'm not saying we're going to have hyperinflation now. To me, runaway inflation is like 5%. 5% would be disastrous for the U.S. economy, let alone 10%. You know, if inflation ticks up at all, that's going to be alarm bells ringing. If it gets to 4%, I'm going to, you know, I mean, I'm going to be ducking and covering. So until then, economically, I guess we're safe. But you know, keep an eye on that. Is all I'd say. Not just the CPI. Keep an eye on PCE and all these other inflation metrics. There's a lot of them. I'm sure shadowstats.com has them all. You know, but keep an eye on that, and when you see that start to tick up, because that's really all we have to watch at this point. It seems like the federal government, they're in unison. They're going to prop everything up until it all comes apart. And so don't be fooled by these very real but misleading GDP numbers. So with that said, if you get anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe, because I upload every day and I'd hate to have you miss one. So I'll see folks back here tomorrow.